Welcome to your Mortgage Insider Update, November the 24th. Happy Thanksgiving on Thursday. The big question for the year, ham or turkey? Email me back. Let me know what you have going for your Thanksgiving. We would give thanks to everybody. Our health, where we are, is a great place in the United States. So just want to wish everybody a very happy and thankful Thanksgiving with your family this week. Interest rates have subsided a bit. This is the classic week or so before the Federal Reserve comes out with their announcement. They're not expected, well, I guess there's a 70% chance that they will cut the interest rate in December. There are very obvious fractures within the Federal Reserve. So we're not going to find that out until the second week in December. The lead up, where we start to see a little bit more data points, the personal consumption expenditure will be coming out, which is an inflation report. Producer price index, which we missed prior inflation reports with the government shutdown, will start to trickle in this week and into next week. Unfortunately, the November jobs report will be delayed until after the Fed meeting, so that won't come out till the 16th of December. So if the Fed was waiting on more data, like more unemployment numbers to come out in advance to help them make their decision, we're unfortunately not going to see that before the Fed decision, which means that they could punt and wait to cut the interest rate into the next year, which would lay some cover for them. Now, if they get the unemployment report coming out for November in the middle of December and it's super negative, what likely would happen is the interest rate market would just come down in anticipation of future Federal Reserve cuts. So let's take a look, see what I mean on the charts. We can see that the interest rates on the 10-year Treasury yield, now that's the interest rate the government pays on its debt in a longer term form. One of the most liquid Treasury bonds out there is the 10-year Treasury, and it does track pretty well with the direction of mortgage rates. Now, we were going to go a little deeper on this today. We've got the 10-year Treasury we'll focus on first, and the mortgage bonds themselves. As the mortgage bond price rises, the interest rate to the consumer would actually come down. So this pretty much displays what's happening today. Down on the 10-year, so interest rates are down. The price to investors is up, so investors are having to pay a little bit of a premium, which means the consumer gets a better rate. We can see the positive break below the 25-day average. We've stayed above this since the last Federal Reserve meeting when Fed Chairman Powell came out at the end of October and said very clearly that it is not a foregone conclusion that there would be another rate cut. Market participants, using the 10-year Treasury as our barometer, push that as interest rates higher. They came quite a bit higher. They've leveled off and they've stayed in the same, from day to day, up and down. But to break down back below this puts us into the potential of very similar where we had on October 10th, prior to the Fed's last meeting, interest rates coming down in advance of the meeting. So we are anticipating to get back down to the 4% level on the 10-year, which would be a positive news for overall interest rates. And we'll take a look at the mortgage bond prices. And we'll take a look at the mortgage bond charts, as that will help, in the reverse. So a very similar story with the pricing on the investors for the mortgage-backed security. Similar to the 10-year Treasury, we're breaking, in this case, above the 25-day and the 50-day average. They're both sandwiched right there on top of each other. Really not going to make a lot of moves. There's a Fibonacci retracement level, which has held. It's been a level that we were at, if we look back to the middle of October, kind of like on the 10-year, that early to mid-October, we saw the prices rise. So interest rates were falling before the Federal Reserve meeting. And then they came out on the 29th and made their announcement. So the prices fell. And we've stayed in that trend where we broke below those 25-day and 50-day averages on the low side. And now we're moving higher. So this could be a very positive news over the coming week as we get, the bets in place prior to the Federal Reserve. This is all big betting market. Anybody that tells you that the stock market's not a big, gambling juggernaut is kidding themselves. But the big money is moving around, and the interest rate environment will really come together before the Federal Reserve meeting. And then they're so far, I would say about half the Federal Reserve members have come out and given some shape form of basically kicking the can down the road, that they don't see enough information available to have already made a decision. They haven't got to their meeting yet, but that's what their public statements have said. The other half has stayed pretty steady. that they want to see interest rates come down at this next meeting. So there will be a push and pull at the Federal Reserve meeting on the 9th and 10th of December. We'll keep you updated. We still have a few weeks to go. Have a great one. Happy Thanksgiving.